In less than 24 hours, we're going to see one of the biggest news results of 2023, but how will it impact markets? Well, it turns out that risky zero DTE stocks have never been used more than into this event. Yes, all-time highs for those. Does it matter? Bank of America also warning us that retail traders have been on the buy the dip side and institutions haven't over the last sessions. And on top of that, JP Morgan expects inflation to increase for the next 2 months. Will this impact markets, or is it already priced in? We've got US oil going out of control, semiconductors breaking a double top down, the skew getting absolutely crushed into this event, and S&P 500 closing near the lows. So what happens next? Welcome back, everyone, to The Daily Show, where we talk about macro, leading indicators, hottest charts, and of course, stocks, commodities, and cryptos. If you like any of those markets, remember to subscribe and smash that like button. But let's talk about semiconductors. The best sector for markets and market health in the US was down big. And Nvidia was at the forefront of the discussion with, of course, China-US relations going down and some kind of worrying signs there. But overall, it was really just selling across tech, buying across energy, and defensive markets were getting purchased as well. So it seems like people were bunkering down into the inflation numbers. Let's have a look at what's changed over the last couple of months. Well, first up, all the positivity has started to turn murky. Transitions to delinquency is increasing here on both credit cards, auto loans, and everything else. Usually that's not a great sign for the economy, but it is what the Fed's trying to do. We've seen smart money versus dumb money at all-time records. What's that telling us? Volatility is just around the corner, plus potentially mean reversion. And of course, we've got leading economic index recession indicators tapping the sell zones. But should we really be concerned about those things? Well, we'll talk about those later on along with US M2 in subsequent videos. But I want to focus today on realistically shipping, because shipping and diesel prices are skyrocketing back up. And it's showing us that probably JP Morgan is right, and there is going to be an increase year on year from the CPI numbers. Here's the difference between Harbour Diesel and CPI year on year. You can see which one predicts it's going to be Harbour Diesel, and it's just showing us that there's probably a little bit of concern around the corners. For investors, what does this mean? Well, investors really only care about one thing: timing the market and getting a cheap price and then holding it for a long period of time. So in this case, what we're looking for is really a bit of a mean reversion of the markets. Ideally, we do see some selling over this period, and we're about to talk to you about why that may occur and also why it probably doesn't matter even if you are a long-term investor in these markets, because things still look okay on the horizon. First up, we've got 51.4% of retail traders thought that the market was bullish on the 19th of July. Have a look at your Nasdaq. You'll notice that was exactly the peak of the markets. Now it's dropping back down, but it's still very, very high. So there's still a bit of froth to take out. Bank of America is showing us that we, the retail traders, are the buyers of this dip. So should we be concerned? I think we should start to say, well, we need to be cautious and wait for a proper turn if we are actually going to buy this dip. Is this normal? Yes, it is. Between the months of August, September, into the middle of October during pre-election years, we usually do sell off. The good news for bulls is that by the end of the year, we usually finish, in fact, 100% of the time, using the data stats we've got, we finish bullish. And why is this? Well, we tend to see volatility after the major earnings comes out. Things go a little bit sour, bad stuff starts to happen, and volatility spikes. Is that happening right now? The answer is yes. And of course, we used over 33 years of data to really bring this to your attention well over a month ago. We've also been discussing the idea that the last pre-election years usually bottom off somewhere around the back end of August into September. Is that happening this year? Well, it'll be something that we'll watch. And of course, it could help us with potentially starting to think about timing the market with technical analysis. Let's take a look at sneaky Wall Street's bets, though, over the last couple of sessions. First up, semiconductors. It turns out that large trade was most likely a sell now that we've seen semiconductors fall through the support. We reported on that a few days ago. We've also seen big oil trades through these highs. I think it's probably profit taking into the CPI numbers, but certainly oil stocks have been absolutely on a tear recently, and they've moved to some serious levels that, of course, I think people would be stupid not to take profit off. And then we moved to a stock that just got obliterated in the last 24 hours. Super Microcomputer, seventh largest reading trade over here. And most importantly, it's coming off absolute capitulation. This stock just kept selling and selling and selling. And as you'll see when we look at the options in just a moment, there were some huge sells off the earnings season. Things are starting to get really bad. Disney was in focus. It was up 2% after hours. However, I think Disney's becoming a play now for will Apple or another company try to buy them out? Apple is obviously the most logical conclusion. We'll find out. That certainly looks like what's happening with Disney. They're trying to sell off some of their assets as they move through these troubled times. We'll also see Barber before the open on Thursday, and do be aware that really the main volatility coming forward over the next 24 hours is inflation, which is 1 hour before the markets do open. Let's move over to options and unusual activity, and there are some big ones. I think Moderna is starting to get interesting, up 2.1%. Could it be used as a hedge? While it's fallen off so much in recent months, it actually found some buyers over the last 24 hours. And then we moved to some of the big horror shows. Super Microcomputer down 23.4%, Upstart down 34.2%, and of course, hyperstocks in general in focus. But everything was down, plenty of large options trade volumes coming through on those stocks. But if we scroll through here, this is the most interesting thing. The first day ahead of CPI, we actually see a massive volume amount, better than the 90-day average. 55% calls, 45% puts. People are pricing in for this CPI. It'll be really interesting to see what happens next. And let's talk about what we need to alert ourselves to. I think everyone should be watching yields over the next 24 hours in particular. And depending on whether we go above 5.1%, which I think will freak the market out, the fear of the unknown, or below 4.6, could really tell us whether we want to be buying the dip or we want to be very, very cautious. Fear of the unknown is always a concern. And according to things what's happening with oil and stuff, it would push to the idea that maybe we will have higher for longer yields and, of course, maybe go above 5.1. Make sure to set it. We also saw treasuries come off their massive sell. 3 huge trades down here. So far, they've been buys, but this could also be a relief rally. Come back up to 98, 99, 100, then sell back off to 88, 90. I love 88, 90 on the charts here. I've obviously liked 94, I like the 75. I like all this zone, really, for a long-term investor. But for traders, you're really just buying a relief based on that huge trade. High-yield junk bonds in the middle, actually finding themselves some support here overall. However, the markets have sold. We'll be watching to see whether we break out. This has been in a fairly tight range now for quite a few months. So high-yield junk will be in focus, I think, over the next month or two. Let's move over to consumer discretionary. This is 1/3 of the US economy. And we do know that it looks like it's selling, but it's not underneath this 220 yet. Until that happens, we can't be sure that the market's turned defensive, so it still looks relatively bullish. But let's talk about semiconductors. Double tops across the board, stocks break below. If that weekly holds, big deal. We also have semiconductors, which we've been focusing on the show, and look at this, double top, break below. If we took the distance, which is A to B, it would push us back down to around 143. I've speculated we could even go 135. Depending on what CPI does and the weekly close, this could mean it's on a little bit for the best sector in the markets, in the US markets, actually falling off from these all-time highs. On top of this, we've also seen the skew getting crushed recently, which is exactly the usual thing that you see when bears are getting control of the markets again. And it got absolutely crushed over the last 24 hours. So another update there to be looking at. Copper, something else we're looking at. We'll bring that back on the charts when we need to. And of course, we know already with our basically central bank liquidity that we're super far away from that chart. So things are starting to look negative on these markets. But as we know, they've been very resilient. So we have to really keep attention both ways. I think the most interesting thing has to be oil. Oil broke to a new high before CPI. Is this some kind of leak? What is this exactly? People are speculating on it. But yeah, that's a huge breakout. And if that holds on the weekly and remains true, we could be going upwards of $90 to $92 a barrel. So yeah, if this holds above, maybe we've got to go down to the Bowser and start getting some oil. Let's move over to the dollar index. It's trapped within 2 zones, which is completely normal. If this does double top off, I'd like to see like a spike like this, break under here, give us an initial sell. end of here, give us another sell. That's, of course, one scenario. The other scenario is we break and hold the close and we keep pushing higher. I like to have patience. I'm going to react to this market condition. I don't want to predict CPI and how it will react, because even if we got it right, what's the market going to do? Like, you know, most of us don't. Instead, what we do is we find where the liquidity traps are. Then we can hunt based with the bigger traders, based with the algos. That's something you want to be doing. Gold's come back down to these levels. It hasn't bounced yet. We thought we might see a bounce there the other day, but things like Barrick and gold themselves are holding a little better. So if we take a look here at Barrick, it actually had a positive session after coming down. You can see it's got this nice bullish hammer on it. A lot of trades gone through on Barrick at GDX in recent weeks. So I have to believe someone has been accumulating, but no real fruition of that trade just yet. Tesla pushes 242, pushes the 240 level. Most importantly, it actually closed below this wick hammer. So that's kind of showing weakness into this result. And you'll see this across the S&P when we look at it soon and everything else. But yeah, CPI is going to be the one that breaks it through. If it does go below though, I could see 200 to maybe 210. And notice the daily 200 moving average, this green line down here, would sit right on that level. Could be an interesting buy zone for Tesla fans if it does occur. Across to big stocks, everything was falling. Amazon basically sold pretty aggressively off the top. It was down 1.49. You can see that if this gap's below, it'll be an island reversal. Meta was down 2.38. Apple is sitting right on its 20 moving average on the weekly, so just sitting on literal demand, waiting for a breakout either way. Microsoft is similar, sitting on the weekly 20. Look how markets do this. They're really good at doing this. They move to an extreme level, they sit on it. We don't know which direction is yet, and then we see the result, and hopefully we can react to it. Some more positive signs were the big trade the other day that we saw in TAN seems to be kind of holding the base for now, though we'll find out what happens over the next 24 hours. We could be forming some kind of island reverse base. We'll be watching this over the next coming weeks. No activation yet. CQQQ, while the news is going worse and worse and worse, the actual chart is still holding firm. Barber will be interesting in the next 24 hours, so watch that along with many other things. XJO, Australian fan base out there, thank you very much for watching. Unfortunately, no new updates for you guys. Double top still is the only trade in play, and it's holding because really energy stocks are doing well, and Australia has a lot of those. German market struggling around 16,000. We know it's a key level. Break and close above 16,000 probably push us back up to 16, almost 300. And at this stage, this is where the sells are. This is where the sellers are. This should be basically a free kind of area for movement of the market. And we did see a new low getting bought straight back up. So again, breakout to the bull side could bring the buyers. Overall, I still think this looks like a distribution. We could be moving right back down to 15.4, 15.6. But yeah, we'll have to wait for inflation. US 2000, this was the trade we thought about yesterday. It turned out the Nasdaq was the better one. We wanted to sell here. This was the zone. It came back up, didn't quite get there, got into another form of supply and sold off. Now it's recovering a little bit in the futures action, but of course, that was an interesting point. Q's closed on the lows, exposing, plenty of gap fill potential down below. But yeah, it's just a slow sell-off. If you think about the Nasdaq, this was the trade that a lot of our private community was looking at in the pre-action yesterday. It turned out to be pretty good. And what that was it was basically based on the series of lower peaks and lower troughs being formed, and it's coming back to this little supply in here and then showing a small turnaround in there. It was a high-ish risk, but low risk technically, but from a statistical standpoint, you're only going to win this trade about 40% of the time. But of course, it pays a pretty good ratio. So yeah, good little level, nice little sell-off, little stop loss, everything like that held. Congrats to everyone that took that. Let's move over to the S&P. Didn't quite close below the low. You can see it's on the Bollinger here. Again, this is a bullish looking hammer, no follow through, which was interesting in the last session, just sold straight off. And now it sits down below. You'd think 4440 and 4400 would be open. This is a gap fill. This is the previous low. I'd like to see it get wiped. And then if we did see something like this, then we could say, oh, that's a buy the dip scenario. Again, reaction is probably key here, and recognizing where is the dip buy, where is it not. Remember, on the S&P 500, it continues to make lower lows and lower peaks. That means we are technically in a downtrend here. And until we get above and close, we cannot be sure that the buy the dip is in. Is this just every morning we're opening up with futures and we're selling during the day? That usually marks a bigger player selling off their event or selling off to us, the retail traders. Bank of America at the start of this video kind of said that exact same thing. Bitcoin's coiling in the middle of nowhere land. Unfortunately, it's not really above 30,450, nor is it below, moving towards 2750, 2800, which is a pretty big level for it. So yeah, I expect an explosion on this crypto soon, but unfortunately just not happening quite yet. Do remember CPI is coming out. This is important. We need to know what's going on here. It's not that we need to interpret it, because our interpretation is probably going to be partially wrong, but we do need to see how the market reacts to it. Remember, ultimately it's patience, react, don't predict. Be careful out there, guys, over the next 24 hours. There's earnings, there's CPI. It could be a fizzer, but I do expect some fireworks here on quite a few stocks. Thanks so much for subscribing. Thank you for being a member of the community, and we'll see you in the next one. Join us as we cap up what happened on CPI tomorrow. Bye for now.